Okay. Welcome back, everybody. Welcome back to everybody at home. We have two more presentations, and then we'll let you go. So our next presentation is from Lacey Huebel. Everybody here knows that one of our really critical and important business partners is Dimensional Fund Advisors. So we're thrilled to have Lacey Huebel with us today. Lacey is the head of responsible investment and is going to talk with us. What does that mean, responsible investment? And here in 2022, with the crisis in markets and the crisis in energy markets, that's a really good question. What does it mean to be responsible in investments? Lacey is a portfolio manager and also is a vice president. She has been involved with the firm's social and sustainable fixed income portfolio since their inception and manages a variety of fixed income strategies. So a lot of people don't know that there's responsible investing that goes on not just in the equity stock market, but also in the credit markets, in the lending markets, the loan markets. Lacey frequently represents Dimensional on ESG matters with clients and at conferences like ours today. Previously, she managed fixed income reporting as part of Dimensional's investment analytics and data team. And before joining Dimensional, she was an analyst at Plan Member Financial. She's a CFA charter holder, like me, and master's degree with an MS in mathematics, not like me, from Kansas State University, and an MA in applied mathematics, not like me, from the University of California, and she earned her BS from Texas State University in San Marcos, where I'm happy to report Catherine also went for her undergraduate degree. Lacey, it's great to have you, and I'll turn it over to you. Thank you.
Thank you so much, Leonard. Great to be here today. It's good to be in Houston in general. I'm from Austin, but my whole family's from Houston. I also cannot help but mention I'm a lifelong Astros fan. I grew up, woo! Go Stros. I grew up listening to Astros games with my grandfather on the radio, watching games with my family. The only time I've been to the World Series is actually in 2005, which unfortunately, as many of you may know, it was a sweep, so I did not see a win. But I was there with my grandfather, my aunt, and my dad, and it was a amazing experience. And we also got tickets tomorrow night to game one. This time it's just my dad, my aunt, and I, but I am so excited to keep the tradition going. Very thrilled. I hope many of you will be watching, and I don't know, is anyone else attending? It's quite a scene there, but I'm really excited about it. Happy to be in Houston. I'm also, of course, really excited to get to be here today to talk with you all about ESG, ESG investing, responsible investing. This is a topic that's really interesting because it lies at a really interesting intersection between scientific research and personally held values. Two topics that are really interesting to see how to bring them together. It's also a topic that's really broad and one that's getting a lot of attention. So a lot of people talking about this topic, coming at it from many different angles. And so it can be a really difficult area to navigate. And hopefully we can bring a little bit of clarity to what this is all about, why people look into ESG investing, what it can do, what it can't do, items along those lines. And in order to help lead in that direction towards a bit more clarity, Leonard sent ahead of time to me a few questions that he's been hearing most often about ESG investing from you guys, from investors. And so I look to address those today. The first of those questions is, of course, a great place to start. What is ESG investing? So we'll definitely start there. Secondly, how can we help you meet your ESG investing goals should you have them? What should you look for in an ESG strategy if that's a strategy that you think is best able to meet your needs? And then thirdly, this is a topic that we're hearing a lot about in the media right now. It seems to be kind of two sides of very strongly held opinions about ESG investing. On the one side, we'll hear folks out there saying, this is how you can help save the world and earn a bunch of money and sleep well at night and just make the world a better place, more in line with all your personally held values. And then on the other side, you'll hear people say, this is in opposition to markets. This is not good for the country. This is not good for investors. As with most things, the truth lies somewhere in the middle. So we'll talk a bit about that as well. Now, first question that we'll get into is, what is ESG investing? So before we get into all that other stuff, let's start off with the foundation. What is this stuff? By show of hands, how many people have heard of ESG investing? All right, a good number of people, not everyone, but many people in the room, which makes sense. This is a topic that's getting a lot of attention right now, certainly in media that I follow, but that makes sense. This is kind of what I do, so it makes sense that I hear a lot about it. But let's start off just getting into some of the definitions involved. And first, what does ESG even stand for, right? That's a good place to start. So E in ESG stands for environmental, the S for social, and the G for governance. Environmental has, I think there's only one aspect listed up here, but I think of it kind of as two parts. The first part being how does the company impact the environment, basically? So what kind of practices is a company employing that are beneficial or detrimental to the environmental ecosystem? And then the other side of the coin is what types of, how does the environment impact the company? What kinds of risks do companies face? And this is the point that you were raising earlier. What kind of risks do companies face due to environmental considerations, whether it be natural disasters or difficulties acquiring natural resources, things along those lines. So a couple different aspects. How does the company impact the environment? How does the environment impact the company? Now, this is a big topic, right? Even just that E, that's a huge topic and very complex. And it only gets more complex when we get to the S. The S is social. So social, what is a company's relationship with people in society? That's a huge topic, right? What does that even mean? Well, for starters, it means completely different things to different people. But there's a lot of different categories there, right? What's the company's relationship with its customers, its consumers? What's a company's relationship with its employees, with the community in which it operates, with its political activities? There's so many different aspects of this S component, and many of them are really hard to measure. A lot of these components are very subjective. So that's something that's important to keep in mind. Even of these issues that we care a lot about and we want to see companies reflecting better practices more in line with our values, it's still hard to assess whether a company is or is not doing so. So definitely something to keep in mind, that S is pretty challenging, I would say, in many cases. And the G is governance. And governance gets into how a company is being run and really what a company is doing to act in the best interest of shareholders. And who are the shareholders? You are. The investors are the shareholders. So what practices does a company have in place with its management and executive team in order to make sure that it's acting in the best interest of its investors, of its source of capital? Now, we see a lot of differences between these different things already, ES and G, right? For starters, that G, what's a company doing for shareholders? Well, everyone cares about that. All investors care about that. As an investor, you should want a company to be acting in your best interest, right? So G is something that feels like something that we all care about. E and S, those are specific topics that certain investors may care about in certain specific ways. So what do I think of when I think about ESG investing? How am I going to use that term today? Well, I think of it more as a way of investing where investors are incorporating their values, some type of system of personal beliefs or values outside of this risk and return story in their investments. So all of us within our investments, we want to act in a way where we're pursuing returns, we're trying to avoid exposure to certain types of risks. And in addition to that, some people have these personally held convictions and values that they want to see reflected within their investment portfolios. And that's really what ESG investing is, a way for investors to align their investments with their values outside of or in addition to risk and return. Now, why would we want to do that? That's the next question. We've talked about what ESG investing is. Next, why would we want to do that? And there was a really good, I don't know if anyone ever watches any TED Talks, but there was a really good one about ESG investing from an oncologist named Dr. Bronwyn King. And Dr. Bronwyn King, she's an oncologist. Her whole career has been dedicated to helping people who are facing pretty negative consequences generally from smoking. And at some point in her career, she was looking through her investments and realized that she had allocations in her 401k to tobacco companies. And naturally, this really upset her. As an investor, you want those companies to succeed in what they do. That's your goal as an investor. And that's not what she wanted. She didn't want tobacco companies to be good at what they're doing. That was, in fact, the opposite of what she wanted. And she gave a really good talk about how important it was to her to see that specific value reflected within her investments, to not have an allocation in her investments to tobacco companies. So that's a really good example of why some individuals seek out ESG investing, because there's these certain topics that are so personally held, so deeply felt. You incorporate them in many different aspects of your life, and what you do, where you work, where you go, where you buy items, and you want to see them reflected in your investments as well. So investments are really important to us also. They're how we plan on supporting ourselves, supporting potentially children, passing down to our children, passing down to charities. These are really important aspect of ourselves as our investments. And many people want to see their values reflected in those investments as well. Now, before I get on to question 2 about how you can help potentially look for those ESG strategies that best meet your needs, does anyone have any questions about what is ESG investing? More questions before we go on? Yes. Yeah, definitely. That's a great question. So the question is, what are examples of a couple of companies that represent each of these different categories? And as you mentioned with environmental, it's probably a bit more straightforward. You would think, but then it's actually not. So one example I'll give, and that's something that's true of ESG investing. I'm not trying to dodge your answer. What I'm trying to say is it's something that is subjective and it means different things to different people. And so one thing that's important about ESG investing is finding that strategy that's aligned with how you think about ESG. So I'm going to give maybe terrible examples, but also good examples of the debate that goes on within this kind of area. So within environmental, for example, a good example of a company that we've probably all heard of is Tesla. Now, Tesla manufactures electric cars, which people consider to be probably better for the environment because they don't rely on fossil fuels. They do have lithium batteries and some other considerations that detract a bit from the environmental pros, but likely on the net, electric cars are going to be better for the planet in terms of reducing emissions than gasoline-powered cars. However, the process, their factories are actually a bit dirtier than other car manufacturing plants are. So Tesla's manufacturing processes tend to not rate as highly as some other car companies just in the manufacturing line of things. So is Tesla good or bad environmentally? It depends. Are you looking at their products or are you looking at their process? If you're looking at both, which do you place greater weight on? Those are challenging topics. Yes. So what makes the process dirtier? Battery construction and just the general efficiencies. I mean, we don't build cars out of air and and rainbows. So we do need to we do consume fossil fuels in the construction of cars. And how much fossil fuels are you utilizing in constructing those cars? Tesla doesn't currently report. Many other car manufacturing companies do, but it is generally believed that their process is not quite as efficiently run. Yes, sir. Right. So thanks. And yeah, just an example from his purchase of a hybrid car and looking into everything that goes into it. Just to repeat for those at home, but if everything that goes into it that has about half the environmental impact as a comparable fossil fuel car would. So with everything that goes in, likely still a positive impact. So certainly a good story there. But yeah, absolutely. So there's just with different companies, the same company, it's really hard to assess whether a company is good or bad, right? It's a very challenging question, even on the environmental side. But certainly many people, I think, would see, some positivity to a future of less reliance on fossil fuels and vehicles. But there's other aspects to consider as well, and certainly becomes a challenging topic trying to suss out, is this company good or is this company bad? There's just really not a clear answer to that question. On the social side, what's good or what's bad? Again, something that's very challenging, very different to different people, very difficult to measure. In our own experience at Dimensional, we have strategies, separately managed accounts where investors are able to kind of pick and choose which goals they want to see met, which ESG goals they want to see met within their strategies. So we have some insight into what investors think about various ESG considerations. And the most popular consideration to exclude from strategies is child labor practices. And so I think that's going to be pretty strong consensus that companies that utilize child labor in any part of their product line is going to be a company that most people are going to put on the negative side of that S category. Many coffee, chocolate, tobacco manufacturers can count themselves among that category. That's a place where you see a lot of child labor, unfortunately. So there's going to be a lot of companies like that and that negative on the S side with a broad consensus. Then there's a lot of companies where there's going to be just no consensus. Alcohol is a great example. Some people would very firmly put that on the negative side from an S perspective. Many other people totally fine with alcohol production, responsible alcohol consumption, and have no concerns from a social perspective about alcohol manufacturers. So there's a variety of companies you could see on the pro or on the con on that social perspective. And still going through with this, the examples question from earlier on governance. I wouldn't want to give specific shout outs to specific companies here, but maybe to specific practices. One practice that we look a lot in governance considerations across our strategies is executive compensation, and making sure that executives at companies are being compensated in a way that makes sense for shareholders, attracts good talent, but is still related to objective measurements of companies' long-term performance. We'll see cases. There was a case last year of a company that faced a large settlement due to their role in the opioid crisis in America. And when it came time for their executive package, they left that entire settlement out of their revenue estimates and paid their executives on the rest of the revenue they'd made, without accounting for that settlement at all. Obviously, we engaged with that company. We very strongly voiced our objection to that type of measure. We voted against that executive compensation plan. We voted against the directors who were on the executive compensation committee. These are things that we look out for on behalf of all of our shareholders across all of our strategies. Some of the environmental and social considerations are really just for those ESG strategies. Governance is something that matters for all investors, something we look out for all strategies at Dimensional. All right, but thank you for your question. It is helpful to have examples because these are very esoteric topics, and it's important to try to bring it back to the real world where we're all trying to figure this stuff out. All right, so the next question to talk to is what to look for in an ESG strategy if an ESG strategy is in fact what you want to have, if it's something that you think is important to you to help meet your investment objectives and align with your values, what can you look for an ESG strategy? And I think there's a few topics that we can talk about to that end. The first is focus, the second is clarity, and the third is investments. So on focus, ESG, I mentioned already, huge topic, very broad. And it's really important in order to have your objectives met that the ESG strategy brings a focus to those areas that are most important to you. If you look at a strategy that tries to incorporate, as some do, over 200 ESG considerations, they take those 200 considerations, boil them down into this one number, and then rank companies on that number. And here's the good ones, here's the bad ones. And it's really hard to know what that number even means. How do you compare a company that has really high fossil fuels with one that lacks a diverse board, with one that produces tobacco, with one that has child labor? And these are topics that are impossible to compare. So really look for an ESG strategy that has that kind of focus, because when you try to incorporate too many things, you really run the risk of not meaningfully addressing any of them. So figure out what it is you're concerned about and look for a strategy that's focused on that concern. And the next thing I brought up was clarity, because as I mentioned also, some of these items, some of these concerns we have are really subjective. They're also really important to us. And so we want to make sure we understand that they're being reflected in the strategy in a meaningful way. So look for really clear reporting that lets you see the impact that the ESG considerations are having on the characteristics of your strategy. If you want to exclude tobacco, pretty straightforward. Make sure there's no tobacco, right? That's pretty straightforward. If you're looking to reduce environmental impact, that can be a bit more nebulous, but there are ways to see really clear reporting that help you feel comfortable that those values are being reflected in the strategy. And I'll show an example of that soon. And then thirdly, investments. These are investment strategies. And Leonard will help you walk through this difficult path, of course, but you want to make sure that these are still solid investment approaches. This is not charity. ESG investing is not a charity. You're not giving away your money. You want to see a well-diversified portfolio that balances trade-offs between capturing returns and avoiding certain types of risks. So important to look for a really solid investment approach, even within those ESG considerations, because you can have both. All right, so let's talk about how we look at ESG investing at Dimensional and related to those three topics of focus, clarity, and investments. So our ESG strategies, we have ESG strategies both across what is you could think of as more faith-based types of exclusions, and we also have ESG strategies that are more sustainability focused. Within both of those strategies, there's a really clear focus there. So for example, for our sustainability strategies, after many conversations with investors, working with scientists in fields of environmental science, the focus of these strategies is on climate change and thus on reducing exposure to carbon emissions. So keeping that focus in mind so that you understand the impact that the considerations are having on that concern that you may have, that you may bring to the table. Now, within these strategies, because of our focus on emissions, we're able to provide really clear, transparent reporting to show what impact those ESG considerations are having on the characteristics of the strategy. So an example of that is here. This is for our sustainability, our US Sustainability Core 1 portfolio. What we're looking at is on the market, basically how much emissions we see on average from the companies in the market, and then how much emissions we see on average from the companies in the sustainability portfolio. About nearly an 80% reduction in emissions intensity of the sustainability portfolio compared to its benchmark. And then here we're looking at essentially how many fossil fuels on average each company has, and a near complete elimination of fossil fuels. So these strategies are really designed in such a way that we're able to provide really clear, transparent reporting, so you can really see the impact that the environmental considerations have on the characteristics of the portfolio, which is really important. You want to make sure that you are able to understand that, because these values you bring to these portfolios, they're important to you. So they're important to us. We want to make sure you understand we're not just paying lip service to these considerations, right? We want to address these in a really meaningful way and allow you to see that we are doing so. And importantly, we're not doing so at the expense of the investments. We're going to apply the same type of investment approach we would apply to any strategy, just with the addition of these specific environmental and social considerations that investors have in order to align portfolios with values. So not sacrificing on that ever important investments piece. Being able to bring both together is really what's at the heart of ESG strategies. That meaningful attention to specific ESG considerations with a really good approach to investments. Any questions on that before I go on to that third major theme of the day? All right, and we'll have more questions at the end as well. Oh, yeah, no more slides, but that's good. So so the next topic is, we've been hearing a lot potentially in the media. I don't know, have folks in this room, again, I can't say, I follow this stuff all the time. So to me, it seems like it's all over the media, but maybe it's not. Are folks in the room hearing this conversation kind of on both sides about ESG? Folks really supporting it, folks really opposed to it. Is that something that's kind of out there, I guess, people are hearing about a bit? Yes. Okay. Yeah. So I think it's important. One thing I think is really important to address is, I think one part of the narrative of this anti-ESG movement is a concern that ESG is being snuck in, right? That, I've entrusted my assets to this company. They should be managing these assets. They shouldn't be sneaking in stuff that I haven't asked them to put in. Right. And I can speak from our perspective at Dimensional that that's just not something we're doing. Right. We see it the same way that any investor would. Right. You have entrusted your assets to us, and we can't just pursue objectives without your say so. For investors who have chosen non-ESG strategies, we're going to do everything we can to pursue higher returns, balance out the trade-off with the various associated risks, keep the portfolios in line with your investment objectives, your investment goals. That's what we're going to do, and ensure that companies are protecting shareholder interests. Now, for investors who have chosen specific ESG strategies, there we can, if an investor's chosen a sustainability strategy, that's where we're going to take these other considerations into account, where we can divest from coal, we can reduce exposure to higher carbon emissions, we can work on these various other objectives, because investors have given us their say-so by choosing these specific sustainability strategies. So it's really important to keep those two separate strategies in mind, that this isn't something that is being done without consent, right? These are goals that are being pursued within specific sustainability strategies. And then those strategies that don't have those specific considerations, just the focus you would expect to see on a well-diversified strategy, managing investment objectives, investment returns, and not pursuing side objectives. So something that is important to keep in mind, I think. Now, within those ESG specific strategies, I think, again, it's just really good to note that these are strategies that we're looking to still incorporate those same types of investment objectives that you would see in any strategy, alongside those specific ESG considerations, and really bringing both together in a very meaningful way. We also want to be really honest about what we're able to do within the ESG strategies and what we're not able to do, right? ESG investing, it's not charity. It's not a way to see this really clear impact that you're having in changing the world in a particular direction. It is a way to help align something that's really meaningful to us as individuals, our investments, with something else that's very meaningful to us is our personal values. And being able to provide that is really what ESG strategies are all about. I tried to leave plenty of time for questions. Hopefully I did so. But yeah, any other questions you have on ESG investing? Yes. Right. So the question is, yeah, he had read recently about the primary ESG index being used as being pretty flawed, and what are we using? And I agree. So the ESG indices are primarily being run by what's called ESG ratings. Has anyone heard about ESG ratings? Maybe not, maybe a little, maybe not. Okay. Yeah, it's again, gets into specific topics. Oh my gosh, the acronyms in this field, it's wild. Even the field itself is an acronym. It's ESG investing. It's just so convoluted. All right, so ESG ratings, those are doing kind of what I talked about earlier. Most of the ESG ratings will brag about how many considerations they're taking into account. Many of them are looking at over 250, that's their number, over 250 different aspects of a company, its products, how it's being run. Take all of those considerations, put them into one number, and then every company gets a number. One's at 4.4, one's at 4.3, and then clearly the 4.4 is better than the 4.3, right? That's how ESG ratings work. And ESG indices and many ESG index funds are based off of those ratings. And that is certainly one approach to ESG investing. But our approach is certainly one that thinks there's a lot of benefit to be had by employing a focus and by not relying on those kinds of convoluted metrics that you don't really understand exactly what's going on behind the black box. Instead, being really open and transparent and clear in what focus the strategy has and how the strategy is aiming to achieve those goals.
What is the variance performance between funds?
Absolutely. Absolutely. And I believe Leonard's mic is off. Is that right? Yes. Okay. So I will repeat the question for those at home. Leonard phrased it very eloquently, and I will not do so. I'm sorry. But asking about, this is a year where energy has done very, very well. It's the sector that's done the best, positive returns. Pretty much every other commercial sector not doing so well. Seems like a real test for ESG investing. How's ESG investing doing? And I think that there's a couple of really important points to how that plays out. And one is, are you being honest about what you can achieve through ESG investing? Because in, let's say, 2020, 2021, we saw energy not doing so well, right? The pandemic was really in full force in the US. Travel was significantly down, commuting was significantly down, and the energy sector was suffering for it. And ESG investing was looking great, right? Sustainability strategies were outperforming. And many people tried to take this as this indication that sustainability strategies are going to outperform non-sustainability strategies. When really it was this very idiosyncratic thing of this pandemic is going on, there's not much travel going on, and energy is not doing well. So during that time, we at Dimensional found it to be very important to be honest about that. We went into meetings saying, look, I know you're seeing your ESG strategy doing so much better than the non-ESG strategy, but that's not something we expect to see long-term. Long-term, we expect to see similar performance between our ESG and our non-ESG strategies based on certain dramatic events in the global economy and just global society. Over short term, we might see fluctuations. We might see ESG do better, ESG do worse. Over long term, we expect them to do about the same. So then absolutely, this year comes around, energy is rebounding very well. Many other sectors are not doing so well. And it's a time where we say, yeah, that's what we would expect. We're seeing some short-term volatility. It's maybe balancing out a bit over the long term, that performance. So now over the long term, we're once again seeing ESG and non-ESG strategies performing in line with one another. So I think if you're upfront at the beginning about what you can expect to achieve out of ESG investing, that these types of short-term periods of volatility are going to be something that are more easily weathered. And I know that Leonard does an excellent job helping out with that as well. It's important to have to be working with experts in order to keep that long-term focus in mind, because those short-term periods of volatility are very hard to weather, certainly. Yes. Yeah, absolutely. So does Dimensional have, one or a series of ESG funds? How are they differentiated? I'd say there's, two categories, one with faith-based types of exclusions and one with a real focus on environmental sustainability. Within each of those categories, there's several different funds. Bond funds, stock funds. Within stocks, there's US, there's global, there's emerging markets. So lots of different ESG strategies across a variety of markets. And within each of those broad categories, really looking at those considerations in very similar ways. So you can really build out an entire portfolio, taking those considerations into account in a really meaningful way, in a way that you can have clear transparency in reporting across the entire suite of strategies. Right. Can energy companies be a part of an ESG portfolio? It's an excellent question. It goes back to the subjectivity involved in this. Energy companies, there are energy companies, for example, in our ESG portfolios. Certain energy companies have more resources dedicated to more renewable energy. Certain energy companies have more sustainable, less sustainable practices. There's an entire spectrum within every field. There's certainly less energy companies in our sustainability portfolios than our non-sustainability portfolios. So the change in return of energy companies, the difference in return of energy companies is still impactful because there's still less energy companies in our sustainability portfolios. But there's a host of sustainability strategies out there that look at sustainability in different ways. And absolutely, energy companies can behave in more sustainable ways or less sustainable ways. And there's certainly various ways of measuring it. But absolutely, I mean, I don't think if it is your belief that we should move towards a greener future, there's no way we can leave energy companies behind. That has to be part of the transition. So it is important to think about those companies as well. Any other questions? There's probably like a minute left, I'm guessing. But happy to take another question or. All right. Well, excellent. Thank you so much for all the thoughtful, insightful questions. It was great. Thanks.